Hello, and welcome to the $1 Trillion Opportunity. I'm Shannon Austin.
I'm Johan Bosini.
I'm here with my superhero co-host, Johan. How are you, Johan?
With my laser eyes, I'm very good, thanks. How are you?
With your laser eyes and new glasses, I'm doing great. Johan, let's talk about credit.
Credit in the form of giving you the accolades you are due, or the other kind?
As much as I love getting credit for a job well done.
Yes, Shannon, you're a great co-host.
That feels a little forced, but thank you anyway. Accolades don't make for very interesting conversation, but credit is what I'm actually talking about. The credit that opens doors to buying a car, getting into a house, or even starting a business. That is a completely different story. So as you know, in the U.S. and other parts of the world, including South Africa, credit's a stepping stone to building a better life. You finance your dishwasher, you can finance Nike sneakers and really anything over time if you're a good bet to repay in the eye of the lender. But there is a downside.
Yes, for many people all over the world, credit has become toxic. Toxic debt is when interest rates are so astronomically high, it's not likely the borrower will ever be able to pay the loan back.
Yeah, toxic debt. That sounds like a bad Britney Spears song. I'm thinking about that video with the snakes right now.
I've seen Britney Spears live in Las Vegas, and it really was quite a show.
Now I'm jealous of your toxic experience.
I know. Jokes aside, toxic debt can really hurt someone's life. Take Brazil, for example. It's arguably the most expensive country in the world to access credit through a bank. Say you have a credit card and miss a payment. You could be looking at an APR of more than 400%.
400% is so hard to believe. So that's why this week on the $1 Trillion Opportunity, we're going to Brazil to investigate what happens when good credit is hard to come by. And we're going to talk to one FinTech company that's expanding credit access across the economy. So let's imagine if good credit didn't exist. That's essentially the landscape of Brazil a decade ago.
Say you had a good income. You were looking to buy a home. What happens then?
Whoa, good luck trying to get a home equity loan.
10 years ago, home equity was a product for high-income population.
This is Sergio Furio, CEO and founder of Creditas. He spoke with Quona's co-founder Jonathan Whittle a few months ago on this very topic.
Creditas currently has millions of customers in Brazil and is expanding in Mexico. Remember the 400% credit card interest rate we talked about? This FinTech offers an alternative that people can actually pay back.
Creditas offers low interest rates on asset-backed loans. And these loans are dramatically expanding the number of people who can participate in Brazil's growing economy. Let's go back to the example of home equity.
I moved to Brazil after business school, and some of my business school friends were in the stage where buying an apartment or a home.
Anne Williams is the Chief Operating Officer at Creditas. When she first moved to Brazil from the United States, she realized just how difficult it was to access low-interest loans.
So when you do the math in Brazil, it often does not make sense to buy real estate because the interest rates are so high. And in fact, the mortgage market in Brazil only began in 2007. So it's a very underdeveloped market for the kinds of credit that I was used to.
So say you had a child who was sick. They needed to go to hospital. Outside of Creditas, what are your options for paying for this?
That's a question we posed to Fabio Zveibil. He's a vice president of auto and home secured lending at Creditas.
Right now, people have, 5, 6 credit cards. They have a bank account in 3 different institutions or 5. I think the average is 5 institutions that you.
Oh, wow.
Because the digitalization the last decade was massive. And especially after the pandemic, people had to get, a digital account to get their emergency checks. It's not an issue of underbanked or unbanked. It's more of poor products being banked, right?
Yeah.
So Nubank or PicPay or these major players have a very large number of customers. So if you want, you can get a product there, but they're very expensive, right? So you can get a emergency loan. Probably not a very high amount.
Brazil is the 5th most expensive country in the world for business owners to access loans. Interest rates are about 20% for business owners.
And there's a lot of reasons for this too.
So credit card rates, revolving rates are over 400% a year. That's insane, right? And it's the same with overdraft on your bank account. It's the same with personal loans, especially for lower income people. So yeah, they're very, very high. It's kind of a subjective belief that people have that they don't want to have debt, and they don't understand that other things that they buy in installments, they buy over time, are actually debt.
Right.
They're just the interest rates are kind of hidden, right?
So there's a lot of factors that come into play here. There was lack of competition among banks, not so many of them, lack of regulations on credit card interest rates. But the history of credit and banking in Brazil is so much more complicated.
Brazil has experienced a series of economic crises. Hyperinflation started in the 1980s, in what a lot of people call Brazil's lost decade. You hear of stories of people rushing to spend paychecks immediately after getting paid because prices were rising so rapidly.
And the last major financial crisis was back in the mid-90s. While everything was in free fall, the Brazil Central Bank stepped in to rescue the financial system, lending about $20 billion.
Wow, that's crazy.
Inflation, right? So it was very common in Brazil, very, very high inflation. So we used to live with that, in day to day, get the paycheck in the morning and go to the supermarket in the afternoon to make sure they get the price, because at night it's a different price.
Wow.
That's insane. That's something that I actually had to explain and teach to my colleagues at the MBA. So it's hard to grasp, right, that the prices change daily.
That dynamic, daily changes in the costs of groceries.
Yeah, like 3 times a day.
Unbelievable.
And there are, armies of people, just marking the prices on the products at the supermarket, right? So that's how we grew up, and you don't want to take out in that scenario, right? And we also had, money confiscated from banks and crazy things that happened in the 80s and the 90s. And then from 94, things were much more stable in Brazil. And then our financial system developed a lot. So our financial system is pretty strong because of that. So banks had to be very, sophisticated to deal with inflation and interest rates and other changes in the market.
Yeah.
So our financial system is pretty sophisticated, but the products were not.
So for a long time, the Brazilian central bank had only one central aim: financial stability.
But there's trade-offs, of course, when you think about it, things like that. And one of those trade-offs, obviously, was the cost of credit.
So this is the landscape of Brazilian credit with traditional lenders. Credit cards with a 400% APR, small business owners stuck with 20% interest rates. A lot of value is frozen in assets.
Enter FinTech. How does FinTech disrupt this space? Let's talk about that.
So Shannon, a lot happens next. Nearly 60% of all Latin American FinTechs are based in Brazil. And one FinTech in particular has really transformed the space.
That is a lot of fintechs. So why don't we step back into recent history in Brazil's past to the mid-2010s and look at how Creditas got started. Sergio Furio found himself working in the US at Boston Consulting Group and Deutsche Bank.
But he clearly always had an entrepreneurial streak in him. And after working in a traditional career, he felt like time was running out to follow that startup dream.
I was living in New York and I was working in a very traditional environment. I was 34, 33. At that point, it was like that type of crisis that it's either now or never to become an entrepreneur.
But the question was, what problem exactly should he set his sights on?
So he looks at the US, where he was living at the time.
I started looking into things to do in the US, and things are so smooth in the US. Everything works well.
Maybe not everything, but a lot of it does.
So then he looks to Spain, right? Which is where he's from.
And same story, it's tiny margins, not like a lot of disruption happening, or at least I thought that it was difficult to disrupt the incumbents.
So then he looks at Brazil, and there's a lot of reasons why he looks into Brazil, but...
Number one was love. My wife is Brazilian, and I was trying to impress her at that point. And I'm going to move to your country, I'm going to change the life of millions. That's more or less the pickup line.
A little untraditional as pickup lines go, but solid.
Yes, so solid indeed, but let's move on. At this time, we're talking about the mid-2010s. Brazil was ripe for disruption in financial services.
With the lost decade of the 1980s and the financial disruption of the 90s in the rearview mirror, it sounds like the Central Bank of Brazil was changing its focus on stability above all else. You could say the Central Bank of Brazil was even encouraging disruption from fintechs.
And here's how Fabio Zveibil remembers that period of time.
I think it was a combination of good people, very forward-looking people in place there at the central bank, and that's probably a result of those issues in the past that we had to have good people managing the financial system. And then in 2010s, with the digital disruption and the evolution in technology, and great entrepreneurs actually pushing for new companies, new business models, and seeing that they wouldn't be able to, get full potential unless the regulatory framework changed. And they went there to the central bank to, ask for changes, and they were open for those changes and open to working together with the entrepreneurs and also with the banks, right? They're very dominant and they're very, great people working at each of the institutions. So evolving the regulatory framework was, a combination of all these factors, and we're grateful that they embraced that and helped in the credit market, in the insurance market, in the payments market. So all those markets were evolved very fast in the last 5-10 years here in Brazil.
Now back to Sergio.
In 2015, the central bank was starting to try to learn. I remember one of the first meetings in Brasilia. I went there with my suit for the first time in 3 years, and there were like 20 people around the table. They were trying to learn. It was like very interesting, like people wanting to learn about that. I started digging into the information from the central bank, and everything was about those fat margins, very inefficient ways of acquiring customers and so on. So I said, okay, so why not? Why not? Let's use some of that expertise that we have built over the years in Europe and the US, and let's try to improve the life of the Latin American population.
So that makes me wonder, what is good credit good for? How can this truly expand an economy?
Well, a bunch of things, right? Investing and expanding a business, going to college. Let's go back to the example of the home loan we heard Sergio, Creditas CEO, bring up.
Today we do home equity loans starting at $10,000 and addressing the middle class, and with a desire to continue going down and down and down. Because at the end of the day, what we have realized is that Brazilians actually, they are richer than what they think, but the money is frozen in real estate or cars. We are seeing that this population can actually improve their life if they take out liquidity from those assets, reinvest them in personal education, in educating the kids, in launching new businesses. They deserve cheaper money. They deserve to pay it over longer and extended maturity periods, and that's what actually allow them to grow and to make the economy grow faster.
For one Creditas user, Julia, she was able to keep on playing soccer with friends after an injury.
In my family, people bonded a lot through sports. Gathering friends to play some sport has always been something I valued a lot. So for me, sports have always been synonymous with quality of life and family. I had a knee injury while playing soccer. I tore a ligament at the time, so I couldn't work because I had no movement in my leg. That's when I decided to seek help to get this knee surgery and start over. In 2017, I began researching a company where I could use my car as collateral and get a high amount, even more than I needed. The service was excellent, they gave me a lot of credibility, and the money from Creditas came through very quickly.
Amazing.
And for others, they can use good credit to replace the toxic credit we talked about earlier.
I got quotes from several banks, including ones where I've been a long-time customer, but I couldn't find a rate that was worth it. The installment amount would be very high, almost the same as the credit card interest. So it wasn't worth it for me at that moment, and I started looking for other alternatives. With Creditas, I think I swapped a bad debt with high interest for a good debt. It's a debt I can control and use to invest in my business.
So why is it that Creditas and other fintechs can offer loans at better rates than most banks?
Great question. Anne Williams, the Chief Operating Officer of Creditas, can explain.
We chose to work in asset-backed loans because the Brazilian population is very underserved in terms of high-quality credit. It's a big market for personal loans that have very high interest rates, short terms, and low amounts. They can't use credit as a tool in their lives because credit is so toxic. So at Creditas, we offer the asset-backed loans that allow us to give a lower rate, a longer term, and a higher amount. The home equity loans, for example, are loans that on average are $40,000 loans, and they can go much higher than that. The auto equity loans are $5,000 loans, and the salary loans are a bit lower, like $2,000 loans. So when we came into Brazil and when Sergio founded the company and I joined a couple years later, these type of loans were available, but in a very hidden and unavailable way. So they're not loans that are interesting for the banks to make.
So traditional banks in Brazil are not interested in making asset-backed loans. It wasn't the moneymaker.
And in a country where 80% of assets are concentrated in only 5 banks, that makes things really difficult.
But there was also a financial education piece to this, right?
What's that, Shannon? Do I smell a communication angle to the story?
I love a communication angle. You know that. FinTechs can change how people access credit, but there's always the challenge of what people think about credit. You remember the whole thing of it's not what you do, it's how you make people feel. There was a real stigma around credit, and it was perceived as toxic or something that could wreck your life instead of enhancing it. Credit was fear.
And people have a kind of a combination of an aversion to credit and a fear of credit. I think they've been humiliated a lot of times at the banks. Even as I'm explaining Creditas at a barbecue or a dinner or something, people will often say, "Oh, yes, yeah, I know how that works. I've never done it because I don't need it." And it's kind of important to say, "I don't need it," because that's, in their minds, because in Brazil, you don't want to need credit. Mm-hmm. So it's a very different way of thinking about credit and how it can be a productive part of your financial planning.
So it's sort of almost like having credit is embarrassing, as opposed to in the US where having a good credit rating is something that you take pride in, right?
Yeah, absolutely.
Yeah. You mentioned earlier about Brazilians going into a bank and feeling humiliated. What is that about? Is that just because I've heard about this in other markets too? It's almost like there's one line for the customers the bank actually wants, and then there's another line for the people that they don't want. Is that kind of what you're talking about? Humiliating?
Yeah, I think so. I mean, the feeling that you're not wanted, and also the rejection that many have received over and over. And I think also the way that the rejection is communicated, because it's one thing to not be able to approve credit. It's another thing to not be empathetic in the way that you deliver that information. And I think that also, as you delve into people's credit history and ability to pay, there are a lot of people who get rejected at banks who could be approved. Mm-hmm. But it's just, the incumbent banks don't really have any interest in investing their time in that because they have a lot of the other customers that they do want, as you say. Mm-hmm. And so that, I think, really creates a feeling of, I don't have anyone to serve me. Mm-hmm. Brazilians didn't really understand the idea of using your asset as a guarantee. So we've done a lot of work around educating the market from the beginning and showing that this type of loan makes a lot of sense for a lot of different use cases.
But for the consumers, then you can pass on longer terms and smaller installments that fit their lifestyles a little bit better. I think that part must be really encouraging. We have another company in the portfolio where they've talked about, when somebody in Mexico gets a debit card for the first time, they talk about like feeling like a real human being. And what a stark difference that is, right? From being in the sort of humiliation line in a bank in Brazil or Mexico to suddenly having a card in your pocket that means you can access the money you made for yourself. I'm sure you see things like that all the time in Brazil, yeah?
No, absolutely. And I think that what we see a lot, we do have a fair, I think 25% of our customer base is in the lower income ranges, but we have a larger proportion of our customers are in the mid-low to the mid-upper income ranges because they own stuff, right? So in order to get our kind of loan, you have to own stuff. So I think that what we hear a lot from our customers is what they're able to do with credit. Mm-hmm. So I think, the customers that we have would probably have access to a personal loan, for example, or a credit card or that kind of thing. But because of the way that it's structured and because of the amount of money that they're able to get in the credit, they're not able to do the kinds of things. So the freedom side of it, of like, oh my God, I have a card that I can now go pay for. I feel like I'm part of the world. I remember the first time I got a dog, I felt like that, walking on the sidewalk. I was like, now I feel like a real person who has like a dog who goes, and so
relatable. I have 2 of them.
Yes. Our customers are using our loans to do things that they wouldn't be able to do without it. So that's where I find the analogy in what you've brought up about the debit card. So to be able to pay for college for their daughter or son, to be able to go on an international trip, to be able to do a renovation in their home, pay for their wedding. So all of a sudden, to be able to have access to a chunk of money that you haven't saved, but you feel comfortable that you'll be able to pay off, is really revolutionary, yes, for our customers.
And the focus on financial health, because you're not just saying, you want money, we'll give you money. We'll just charge you a lot for it, or we'll just make it impossible for you. You're saying, you want money, let's see what you can afford.
Exactly.
When you look at how customers at Creditas are actually using their loans, it's really fascinating.
And you can see how good credit can improve people's lives, expand economic access, and really improve the health of the economy overall.
We have 10% of our customers over time who use the resources from the loan to finance their small businesses. Some of our B2C customers actually take out the loan and reapply it in their business. We have some neat cases about that, people buying a stove for their bakery or a chair for their dental office using the loan.
So before Creditas, it was nearly impossible for everyday people to get a low-interest loan using the assets they already have. Their car, their home, a steady paycheck.
Most banks in Brazil don't traditionally focus on this customer segment. Think of the soccer player paying for a doctor's appointment, the entrepreneur expanding their business, the person replacing toxic credit with good credit.
I think it's what made the market ripe for companies to come in and offer a different way of dealing with people, of serving people, and also a different way of thinking about how they can make money off of financial products.
What does that look like as it plays out for consumers? What are consumers seeing now that's different from the before?
Consumers have seen a completely different story in terms of access to banking itself and access to credit in the last 10 years. You know, it used to be very difficult for somebody with a low income to even get a bank account in some cases. So there's lots of competition. There's lots of digital banks. Many people have, more than one account these days, and they don't pay anything for the account. So that's another big change. There were a lot of minimum fees, even when I moved here, and during my first 10 years here or so, you had to constantly be looking out for these fees that were eating away, at your bank account. And it just seems so hideous that you lose, your money just gets eaten away by these fees. So all of that has really gone away.
Amazing.
People are able to have their bank accounts. They're able to make these transfers using Pix. It used to cost money to each transfer.
Wow. And
Brazil is amazing in terms of its digital infrastructure and practices and governance around financial products. So, we do a lot of things here in Brazil that when I go home to the States, I'm surprised that I can't do. And I sort of have to relearn to, wait a minute, how do I make this happen? How do I do this transfer or that kind of thing in the States? So that's made a big difference. I think that the access to credit has also improved, although there's still quite a challenge around being able to structure high quality credit products that people are able to have access to, given the rates in Brazil and, the macroeconomic pressures.
Creditas unlocked new opportunities for their users, but I'd be curious about default rates. Can these loans be paid back? What would a true sign of success be?
The default rates for asset-backed loans are much lower than the default rates for personal loans. That's sort of the whole secret behind the product, and that works both for Creditas in terms of our risk and also for the customer in terms of being really responsible about their loan, because if they don't pay off their loan and the process moves forward, they will lose their car or lose their home. On the salary perspective, that doesn't happen because the company's taking out the payment, But for the home and the car, it serves really well to protect both the customer and us. Customers are paying longer term loans. So, 2 to 15 years, they're paying these loans. Default rates are very low, and that definitely contributes to people's positive credit score.
And it turns out that this combination of financial inclusion, a smart product, and the right time in the market was incredibly lucrative.
By 2021, Creditas was in hyper-growth mode, entering the coveted unicorn status. They earned a $4.8 billion valuation with investors, including Quona. Back to Sergio to explain.
Today, the company has roughly $400 million in revenues, 400,000 customers. This is a company about providing the largest financial product that the customer is going to have. So we don't intend to have 100 million customers, or we will be bigger than the GDP of Brazil. But still, we think that we are building a platform that really changes the life, for sure, of the individuals that acquire our type of financial products. A 45% gross profit margin, and this has been like a big win. It's not only about growing the business and making sure that we change lives, it also needs to be in a way that we can scale it, that we can provide the stream of cash flows that are gonna allow you to reinvest all the profits and grow the company bigger and bigger and bigger.
With millions of customers accessing loans with this FinTech product, you might be wondering how Creditas has been a force of changing Brazil's economy.
If you think FinTech, even in the world, it's probably call it like a 1% of the entire financial system. So we don't really move the needle by ourselves, but it's not only about what they add, it's about how much they are playing the drums and making sure that everyone is aligned and create competition, foster these type of dynamics. So sometimes you have that multiplier effect. So I think that's pretty cool. You have thousands of companies trying to do small things, but when you combine all together, it really is changing the dynamic of the industry. Obviously, the poster child, we cannot forget about them. It's Nubank. Amazing team, amazing value proposition for the customer. But they have been educating the audience. They have been teaching the customer that they deserve a better financial product, regardless of your financial condition and so on.
Nubank is the largest neobank in the region with 88 million customers, and that's just in Brazil.
And as of this minute, right? Wait 5 minutes and they'll have more. This multiplier effect of FinTech is really transformational for customers. But what's next for Creditas?
Today, we own the largest insurance broker in Latin America, which is Minuto Seguros, a company that we acquired 3 years ago. And we also set a foot in Mexico. A similar problem, different. And this is one of the big learnings. Even though conceptually the problems are similar, when you get into the details, it's so different. And that is one of the worst parts of FinTech and one of the best parts of FinTech at the same time. Expanding abroad is very complicated. At the same time, it's as complicated as for somebody else to come to your country and try to compete against you. So that's a nice competitive advantage to have. Probably it's more on the personal side. I think that every time that you think about what's the legacy that you want to leave, you want to think about yourself as someone that is trying to do something big. And so you're probably always searching for big problems to solve. It was maybe like a man searching for a problem. And definitely there are so many problems in Brazil that you can live multiple lives and still continue growing, I guess.
And that's all for this episode of The $1 Trillion Opportunity. If you enjoyed this episode, please check out our last 2 episodes in the feed. We had a great 2-parter with Carlos Eduardo Brandt from the Central Bank of Brazil, exploring more about what the central bank did that made it such a great environment for fintechs like Nubank and Creditas.
Follow The $1 Trillion Opportunity on Apple Podcasts, Spotify, iHeartRadio, or wherever you listen to podcasts.
The $1 Trillion Opportunity is produced by Quona and Pod People. Our producers are Danielle Roth and Hannah Pedersen. David DeLuca edits the show. Special thanks to Rachel King and Amy Machado.
Shannon, thanks so much. That was great fun. We'll be back in 2 weeks with more on credit in Brazil. There's that word again, entrepreneur.
Entrepreneur. Entrepreneur. I never get to say it, but you always get to say it. I think there's a reason for that.
I've definitely been baited here.
Can I just say for our bloopers reel, I love the way you say entrepreneur instead of entrepreneur. Save that for the bloopers, Danielle. And before we go, I want to say the word one time for you, entrepreneur.